This meeting.
Hello, good morning, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me well? All right, so I have just sent you the course plan of Advanced Audit and Assurance here in the chat box. So we are going to start discussing it. Just give me 1 minute only. Yes, Advanced Audit and Assurance, AAA. Student, the subject is utilizing the knowledge from AA, which is called F8, and the one major contribution is from SBR. That is from the SBR. Now, the point is, so what about those who have forgot F8? No worries at all. We will be discussing everything from scratch over here. SBR, yes, we will not be revising the IFRSs over here in detail. Yes, a quick overview will be given. Some relevant aspect will be discussed when we will be discussing the question from the past paper. Yet, if you have your notes on IFRS, you should start discussing, revising these things from the notes. Now, so AAA, Advanced Audit and Assurance. The syllabus. AAA, the syllabus is not big syllabus. A few areas are there. The same you have studied in F8. For example, audit of historical financial statements. The second is we call it ethics and practice management. And the third is other assignment. So collectively, there are, we can say, three areas are there. Three areas are there. Audit of historical financial statements, audit of historical financial statements. This starts with acceptance of audit. There is a process how to accept audit, and then there is audit planning and risk assessment. Then there is audit procedures and evidence. Then comes review and audit report. Review and audit report. So basically, these four part of the audit of historical financial statements. And let me tell you, out of these four, these three are mandatory to be tested in every exam. Mandatory testing in every exam. And that testing is normally for, there are, that in AAA exam, we know that there are 80 technical marks and 20 professional marks. We know that. So out of 80 technical marks, around around 50 marks, they are for these three areas. Sometimes 60 as well, out of 80 technical marks. Then, so that's why very important section. Ethics and practice management section. Very, very, very important. So it has codes of ethics. It has professional liability. And audit quality management. And very important section now. You will find almost in every exam from previous 2-3 attempts, 10 to 20 marks. Minimum 10 marks you will find. Minimum 10 marks you will find in exam. And then comes the other assignment. Other assignment that includes PFI, prospective financial information, forensic audit, audit of historical financial information, and then sustainability reporting and audit. Due diligence. And again, it is becoming common that almost in every exam, around 10 marks, yes, are being tested. Then there are technical articles. 2, 3 technical articles are there. Data analytics is there. Okay. And there are some current issues. 2, 3. That is your syllabus. So this is whole of your exam, AAA paper. Yes, there is one small topic, the chapter, which we need to start today itself. That is regulatory environment for audit. Regulation of audit, which has money laundering and the topic. We need to start with this today. This is the topic for today. So this is the total syllabus of AAA. Now, next point. How we will be studying and what is the prerequisite of AAA passing the yes. So steps in preparing AAA exam. Steps in preparing AAA exam. 3 steps are there. Step 1. For each topic, you should have conceptual knowledge. And of course, some topics needs memorization as well. For example, codes of ethics, audit report, what types of audit reports are there, under what circumstances all the reports are given. So, memorization. Same is about the code of ethics, ethical threats, what are the safeguards in each circumstances. So, you should have that knowledge well memorized and concepts as well. The second is application of knowledge to scenario. Application of knowledge to scenario. That the scenario in exam, you must be able to analyze that. This is very core skill. Student normally jump from conceptual knowledge to answer. And I must say, you must be able to read scenario, identify the relevant points. This is very much important. That what are the points which are relevant to my scenario, my question, how that knowledge is applicable here. And the third one is demonstrating. Demonstration of that application of knowledge to scenario as per examiner guidance. Now, what does it mean? This is very important sentence. That demonstration as per examiner guidance means if you apply the scenario, the knowledge to the scenario, and you start writing the answer in your own way, no marks. You must have to write answer the way examiner tells you. Those ingredients for which marks are allocated, that must be part of your answer. If you do not do that, no marks. One thing. Second, you can see I have mentioned the word scenario in 2 points, 1 and 2. That your answer should be applied on scenario wherever relevant. In majority cases, it will be that if you are not writing answer as and on scenario, not utilizing information from scenario to write your answer, no marks. Generic discussion, no marks. Whatever you write, whatever you discuss, that must be on the scenario. Remember that. Otherwise, forget. The marks will be granted. Now, so students, AAA, I will provide it by notes, volume 1, maybe in 1 or 2 days. I can give to you right now, brother, you can have it, but don't print it. I'm doing a thorough review of the same. It is not yet completed. Okay, so I'm sending you here. So the notes we will be providing in 3 volumes I will provide. Plus exam kit we will be doing. And I will be giving you weekly assignments, I'm telling you. And I'll be marking the assignment in the class and after the class, means during the week. And this is the assignment which I mark myself, not my assistant. Remember that. That's why these assignments are mandatory part of it. Mandatory. And core part of my teaching. Because as per my analysis, 90% failure among students in AAA is this third point. They do attempt exam, they study hard, they attempt exam, and then they come back satisfied and then they fail. The reason is that they don't know what they are not writing. And they don't know what they are missing in their answer and what they are writing wrong in their answer. That's why you people must be very cautious. Very careful. Next, any question from your side before I proceed? Any question from your side? All right, course plan. Come towards course plan. So I have mentioned tests here. I might be conducting tests as well, but my assignments are my tests. When I give assignment, that is test automatically. So I am starting today with it, right? Regulatory environment, overview of audit process, acceptance of audit, audit methodology. That these are the topics for today. And starting with audit acceptance, audit process, then audit plan, risk, and this is basically audit planning area, which I said, the whole. And then procedures and evidence, then report and review. Then comes the other assignment, codes of ethics, quality management, and so on. I have mentioned one thing over here. I have mentioned one thing here. 2 to 3 additional practice sessions can be arranged. And remember, around 15 hours, additional video recording will be shared related to questions practice. Because we will be having around 70 to 75 hours course in total, including this 15 hours. Okay, so this is how we will be moving. What is important for passing AAA? Students, regular, same basics, back to basics, regular attending live class, doing assignments, doing additional practice questions at home from kit. For example, one type of question we do, 2 questions in class. Now there are 3, 4 more. So do that yourself. There should not be anyone coming to you and asking you to do these questions. There shouldn't be need of anyone. Now, so we are starting with what students said they have been unable to download the notes and the, okay, don't you worry. I am going to upload it on the portal itself from where you joined the class basically. You know the portal where you joined the class? So it will be uploaded right there. Just give me 1 minute. I will upload and tell you. Yes, it is done. You can refresh your browser of the class, go to the course inside, you can find it and download it there. Course plan is also there and the notes as well. Now, so starting with here the notes are. So I have already discussed all these things with you. Almost. What examiner says. Okay, professional marks we will be discussing now cover. So regulatory and framework for audit and assurance. So starting with this. Students, regulation of audit. Regulation. So regulation means direction, control, monitoring, oversight. That is called regulation. And audit is being regulated. Audit is being regulated internationally, because we are talking about international and nationally as well. So the first body which we talk about, that is IFAC, International Federation of Accountants. International Federation of Accountants. And it has two subcommittees. The one is IAASB and IESBA. Now, what does this committee do? So IASB, International Audit and Assurance Standards Board. International Audit and Assurance Standards Board. This subcommittee of IFAC actually updates, regulates, revise ISAs, International Audit Standards on Auditing. Yes, ISAs. These are the guidelines how to conduct an audit. Now, the second, they issue ISQMs. Yes, International Standards on Quality Management. The audit's quality of audit needs to be managed, ensured. How to do that? So these standards are issued by IAASB. Now, they issue multiple other standards are, but they are not part of our discussion or in AAA. So enough. Okay. Now, so IESBA, another subcommittee of IFAC. So that is International Ethics Standards Board for accountants. So what does it do? It issues, revises codes of ethics. You have studied codes of ethics before, and we will be doing it as well. So, students, let us proceed further. Then there is a subcommittee of IFAC that is called Public Interest Oversight Board. Yes. Public Interest Oversight Board. So what does it do? This is, you can say, a monitoring committee over other boards. That these boards are doing their job well or not. Whether their members are competent, performing their task to the quality in the best interest of public. So public interest over name it tells that its role is that their members are appropriate, doing their job appropriately, functioning of the subcommittee, the IFAC. Next, the next point is we are talking about regulation of audit, right? And there is very important role in the company. The regulation is done by audit committee. Audit committee of company basically comprised of entirely non-executive directors. And their role is, what is the role? To monitor independence of auditor. To nominate auditor. Not nominate, not appoint. Appointment is done by shareholders. Their role is, let me go to the notes. They are written there. Yes, here it is. The roles of audit committee. They are related to the external auditor. Deciding their fee, yes. They are, or the audit committee is a forum through which auditor and directors, they talk to each other through audit committee. Audit committee is a medium. So that is basically very important role. Scope of work. Next. So, students, the next topic is very important regarding the regulation of audit. That is money laundering. Money laundering. So, what is the money laundering? Money laundering is the process that income from criminal sources that goes through a process and then start looking like clean money, white money, legitimate money. So this whole process is called money laundering. And there are a number of practical ways. Number of practical ways. So, students, money laundering, the one easiest way, which is now in the books, practically it is not happening by the way, that they say money laundering has three-step process. The one is called placement. That you go, you have the money from illegal sources, drug dealing or something, smuggling. Okay. So you go and you deposit that money in the bank. So placement is just when it crosses the boundary of from illegal to legal system, it enters the legal system the first time, deposit in the bank. Then the second stage is layering. This is the actually point where there are the layers of transaction, multiple transaction, complex transactions are orchestrated, designed, implemented by, everything is done by a design, not by chance. That layers are generated. Then it becomes difficult to trace the origin of money. That it becomes difficult to trace the origin of money. Now, then is integration. So layering, now it has taken the form of legal money. You see here, placement enters the bank, then layers, payment of false invoice, transfer to the accounts, one to the other to the third to the fourth, international transfer. And then integration is the stage where now it has become the taken the form of legal money. Now, so money laundering, another example, which is quite common now. That, for example, we sell some product. The product's actual price is $1,200. We charge 1,200, and we sell 5,000 units annually. We charge this price, but system records a price of $2,000. So how much a system record whenever sale happens? So how much extra it is recording? $800. So if we 5,000 units into 800, so $4 million annually. The excess amount recorded, where it came from? Most likely, what happens? 1,200 collected from the customer, $800 in from the illegal money added, recorded. System, it is entered to the system. You see? So $4 million annually being converted. So inflating the sales is one option, one way. Sales amount. Inflating or deflating costs. Some essential costs. We know a company is having 40 employees, staff. But their record is showing that the salaries are being paid through the accounting record, that is for 20 persons. So the remaining 20 are being paid amount out of illegal money. Or even 40 employees. The salary of each is 50,000 per month. But the record is showing it is 20. Yes, they are being paid 25,000 in the record. Record is showing this. The additional 25,000 we are paying them through cash, illegal money. So you decrease the cost, do not show that, but you are actually paying it. That is also called money laundering. Now, the next point is, so once you actually use it different ways. Now come here. So money laundering risk indications. What are the symptoms which may show that this company might be involved in money laundering? What are the symptoms? The first is excessive use of excessive. The word excessive is important. Cash-based excessive transaction. Secrecy. Don't record is not available. You ask them, they don't respond. They don't tell. a pattern that you deposit an amount and immediately wire to another account. Cash, very important. Large currency or bearer instruments, they don't do online transfers. They don't pay by bank. They come, they withdraw money again and again. Deposit and withdraw, deposit and withdraw. Bearer or currency transaction is this. And that is happening below the monitoring threshold. What is monitor? This is by the central bank. It may be, for example, here in my country, it is 1 million. Monitoring threshold. All transactions which are 1 million amount, that will be automatically selected for monitoring by the system. So what you do? You do transaction below 900,000, 950,000, 960,000. You know that. So they are doing transaction just to dodge the system. Yes. So anti-money laundering procedures. So every company should appoint a MLRO, Money Laundering Reporting Officer. Who is MLRO? MLRO is a person who is expert in money laundering related laws and regulations. Expert, who has got expertise, knows the knowledge, training, experiences that how to identify, how to prevent money laundering. First of all, prevent. What are the sources? What are the system should be introduced, compliance issues related to that. Then undertake customer due diligence. Undertake. They perform due diligence. You go to the bank, you want to open the account, bank says, okay, what is the source of income? Bring a letter of your employer. If you have registered a business, bring incorporation certificate, business registration number. They have a checklist of documents, your ID card, your passport. To perform the due diligence, who is the owner? What is the purpose? So due diligence, it is coming next in a few minutes. Further detail, which I have already told you. Yes, it is the responsibility of accountant auditor. Report suspicion of money laundering. Suspicion. Even you are having suspicion and you are not sure that money laundering is happening or it is taking place. You have only suspicion. So you have to report that. And then you must maintain record of the customers who is client for 5 years after engagement. Minimum 5 years. Country to country, in some countries maybe 7 years. Somewhere it may be 10 years. And you must have procedures to ensure compliance with the law. What are procedures? You have to fill the form. Customer come to you, fill this form. And all the things are listed over there. Then you take that form, go that authenticated from the authorities. Procedure to comply, ensure compliance. Train all staff in these issues. You train. Now, the next point is yes, training. How to train? Training of staff must be done how to report to MLRO, how to identify clients, how to recognize the situations. We call it ethical sensitivity. Ethical and legal sensitivity. There is a term that you must be sensitive enough to sense it that something might go wrong here. This situation may lead to money laundering. Yes, what are the main money laundering offenses? And the company's processes to prevent money laundering related to record keeping, etc. So arrange a workshop, conference, online webinars, etc. Now, so we said they should do due diligence. So due diligence, who is the client? Who is the owner? The nature of the business, source of funds, the economic purpose of the business. Very important. Very important. Economic purpose. A business is running here in a building, okay? And that business apparently very few customers, very low activity, but they are in business since last 7 years. They are on rented place. No much volume of apparent activity of business. So what can be they doing? That may be doing fraud. They might be involved in money laundering. That that apparent stalled building may not be the business actually. Under the umbrella of that building, they might be doing something else, voiding their black money. So that they should be alert. Now, know your client. So individual client and entity. If your client is individual, ask for photograph, ID, national identity card, driving license. We cost for utility bill as well. Okay, so these all lead to this person's identification. You might be, I used to think that why they ask for utility bill. I'm going to open an account in the bank and they're asking me utility bill. Why? So the behind purpose, they want to confirm where you belong actually. What is your identification? And now they ask for sometime employers letter to whom it may concern. They ask that. Or bank statement they ask sometime. For normal risk entity, obtain from registrar of companies. Yes, entity. Companies. There is certificate of incorporation, address, list of shareholders, directors. The purpose of checking all this documentation is why they are checking this documentation. They are checking to spot some unusual business activity. unusual, and of course, identifying suspicion of money laundering. Now, what are the offenses in the UK? It's one of that happened with, you know, long ago, one of my friends. He got arrested, unfortunately. He was in possession of the money of anyone. That is also crime. That you are possessing the proceeds of crime. You are helping someone to do money laundering, assisting, helping in any way. So, and for auditor and accountant, these are very much important. Very much important. That you are responsible to report money laundering. Even if there is suspicion, you must have to report. If tomorrow it is proved that you were having suspicion of money laundering, but you did not report, that will be crime. You will be tried under the money laundering law. Or you have tipped off a client who is being investigated, and you have given them tip, hint that you might be investigated, and they get cautious, they make arrangements, they destroy the evidence. Even the destruction of evidence, documents, is also crime. But what you have done, you have tipped them. Sometime, I am auditing a company, and I all of a sudden I got the suspicion they are doing money laundering. Some transactions are there suspicious. I ask them once or twice or thrice, different ways. This is another way. They may get alert. That why this he is asking this much. Now, students, duties, reporting duties. So, so they have to report suspicion to the authority as per law. For example, report to regulators. If law requires, in the audit report, if law requires, report to those charged with governance. And auditor may resign even. Write the reason that I am not satisfied with the explanation. Resign. Or I have to, if directors are involved, may need to report on directors' conduct. So, per members of professional bodies have obligation to report misconduct by member to the, for example, ACCA members. If involved, we need to report to the ACCA. Now, this is the past exam question, Heron Company, on the money laundering. Discuss the implications of circumstances described in the audit senior's note and explain the nature of any reporting that should take place in the by the audit senior. Nature of reporting. So go through, read the requirement once again. Yes, please. Take 5 minutes from me, and then I will be discussing this with you people. Have you gone through the question? Tell me, scenario. Communication is the key. Do tell me, please, once you have gone through it. Okay, so let us start discussing this. Discuss the implications of the circumstances described in the audit senior's note. 6 marks. Although it is an old question, but it's a good question for money laundering discussion. Explain the nature of any reporting that should take place by the audit senior. 3 marks. So you are a manager in the Larcat company responsible for the audit of Heron Company, an owner managed business which operates a chain of bars and restaurants. This is your firm's first year auditing the client, and audit for the year ended 31st March 2012 is underway. The audit senior sends a note for your attention. When I was auditing revenue, I noticed something strange. So story is starting here. Heron Company's revenue, which is almost entirely cash based. So we said that cash based business is ideal for the money laundering. Excessive cash based. We discussed this point. The money laundering risk indicator revenue is recognized at 5.5 million in financial statements. However, the accounting system shows the till receipts for cash paid by customer to only 3.5 million. What is the difference? You know that financial statements draft finance 5.5 million. Till, cash till. The cashier where they collect cash. That is 3.5 million. So what is the difference? 2 million. There is a matter of $2 million. This seemed odd. So I questioned Ava Gill. The financial controller about this, she said that the Jack Heron, the company's owner, deals with cash receipts and posts through journals with cash and revenue. Eva asked Jack the reason for journal, but he refused to give an explanation. Secrecy over transactions. Unusual entries, journals are being used for the recording the cash. Owner himself is recording the cash journals. Why not through accounting systems and processes? Now, while auditing cash, I noticed a payment of $2 million made by electronic transfer from the company's books to overseas finance. What is it? This is called layering. This seemed to be placement, entering the cash, and all other things are supporting it. The bank statement shows that transfer was authorized by Jack Heron once again. No documentation. Alarming by the size of this transaction and the lack of evidence, I questioned Jack Heron, asking him about the source of cash. Reason, he became aggressive. Now, how to discuss it? Implication 6 marks. First of all, starting with that it is entirely cash based business, ideal for environment for the money laundering. And then there is difference between the revenue recorded in the financial statement and the till receipts. $2 million is the difference. So it seems like that this is $2 million is being injected in the business from the criminal sources. Placement stage of money laundering. And the record is being through the made that of through the journal, unusual, which increases the doubt that why it is not being done by the accounts people through the normal accounting cycle. And then there is no explanation. He refused, which adds to the doubt. Suspicion of money laundering. And then this $2 million appears to be transferred internationally, authorized by the same person. It might be part of layering to disguise the source origin of money. It may be brought back as a part of integration then afterwards. And again, there is secrecy, no documentation available. Which again, the risk is high over here of money laundering. And then they say that then the next stage will be integration. They may bring back this money for investment, for purchasing of assets and other things. So the audit senior is asking for the source of cash, and he's becoming aggressive. His attitude is not acceptable. That points out something wrong. But there is a risk of tipping off offense. That doing this much questions to the Abagul may have alarmed him, may have actually alerted him to be more cautious, and tipping off offense is there. Now, come here. Answer is written by me. So you see here, starting with the same 2 million illegal, maybe introduction through illegal means. Yes. He himself posted, and suspicions are heightened. Then 2 million transferred through layering stage, disguise the original. Then will come the integration stage, bring back, utilize. Secrecy is also again. Then questioning, the last point. Aggressive, integrity. So, potential risk of tipping off. So, implication, yes, one point. The firm may wish to consider withdrawing from engagement if law allows, but again, it may tip off. So, if they continue, they should be conduct a review of the work. Now, reporting. The reporting, audit senior should report to MLRO. Who's MLRO? And then to the authorities, bodies, in the standard format. The reporting should be done. I hope it is not a big deal to solve such question. Yes, the first questions you have gone through the for AAA past paper question. Now, the next topic is audit acceptance. So I will take a 5 minutes break. I will start with audit acceptance, and then we'll move to the audit methodologies is a topic for today. Yes, two topics are there to be done today as per our course plan. Just a minute, please. Yes, introduction is done. Yes, regulatory environment, audit process, we know, except yes, audit acceptance and audit methodologies. Practice question we have already done, Heron Company. So just 5 minutes break, I'll be back and continue. Yes, students, now. So acceptance of audit. So audit should be accepted, but before, auditor should need to identify any issues present. Issues. And if they are resolvable, resolve and accept. Not resolvable, accept audit. Sorry. Yes, decline the audit. Now, so what is meant by issues? There might be issues or of two types. One is called auditor related issues. The other is called client related issues. Auditor related issues. What are the matter to be considered? First of all, whether auditor is qualified to act as auditor as per law. Law allows them to act as auditor. They have competence. They have necessary certification as per law. Yes. If it is answer is yes, then move next. Whether resources availability. So resources. Now, what is it? Staff available? Technical expertise available? Some audit required specialized knowledge. Banking audit. IT companies audit. So this technical competence is needed. So they should assess it. Then engagement economics. Cost and benefit analysis. That what will be the cost of audit they're going to do and whether it is justified profit, we need to consider. Client related issues. First of all, client screening is done, which is called customer due diligence. Know your client, KYC. We have recently done in money laundering. That is performed. Who they are, whether they are politically exposed persons, politicians. Should we accept the audit? If yes, what should be the procedures to deal with them? Now, the next point is reference. References are obtained from their banks, from their suppliers, from their clients, who they are. And then communication with outgoing auditor. Why the auditor leaving them? Existing one. Why they are appointing us? Is there any issue? To communicate with them to get information. Of course, that communication is done with the permission of the client company which want us to audit. And if they respond, the current auditor responds, do not respond, the way that we analyze that, everything. If they behave unprofessionally, we communicate to even professional body as well, that the current auditor is not cooperating with us. So this is very important aspect. Now, the next is preconditions for audit. Come to the notes. Yes, preconditions. What preconditions are? Preconditions are of audit are those factors, two factors, one and two. We are satisfied with this work, acceptance procedure, everything. We are satisfied. But still, there are some factors, if they are not present, we cannot audit them. First of all, financial reporting framework. They have prepared their finance statement. And financial statement preparation frameworks are different. In different countries, might be different. To this entity, which want us to audit their financial statements. The reporting framework they are using, that is allowed by law for that type of entity. If yes, it's good. If not good, if it is not as per law, we say, sorry, we cannot audit. The second point is, yes, management's agreement. Management must acknowledge these three things. What these three things are? Their responsibilities. Preparation financial statement as per framework is their responsibility. Internal control that is necessary to enable the preparation of financial statements which are free from material misstatement. So control implementation is their responsibility for financial statement preparation. And they have to provide auditor all unrestricted access to staff, record, whatever is required for audit to obtain audit evidence. These, if they do not take the responsibility of financial statement control, then we cannot audit. If they don't provide access to information, we cannot audit. So any one of these two is missing, audit cannot be performed. Now, so for example, preconditions are present. Now we sit down with the management of company. We decides about terms and conditions of audit. Our responsibilities, their responsibilities. Our roles, their roles. Scope of work. Everything is discussed. So things are decided verbally. verbally duties, responsibilities of auditor and the management. And then they are put in writing in a document which is signed by audit partner and directors of the company, some the representative. This become a binding agreement. It is called engagement letter. So engagement letter, what are the content, scope of audit, which laws and regulations, which standards are applicable. What are the responsibilities of management, responsibilities of auditor, what they are, there are for during the audit and related to financial statements. And then what is the relevant financial reporting framework? What is the content of any report? What they want? Reporting format. And any matters they want auditor to communicate. Yes, key audit matters is basically a topic. This last point is included in the audit report of listed entities only. So because this requirement is for them. Next. So any additional, what additional can be included? The fee, timing of audit, expectations, whether expert will be needed during audit or not. You need to memorize these. Any other need not to memorize. Because engagement letter is basically a document which is for clarity of the both parties regarding audit. It is about the clarity. So whatever those both parties want to be included in the engagement letter, that is included in it. That is included in it. Now, so students, let us proceed further. The next point is, yes, sample on, you can see this sample, this is on Study Hub. This sample you can see how the engagement, what engagement letter looks like, although it is not needed for exam. But still, if you want to see, have a look over there in the Study Hub. Now, so an audit firm appointed as auditor in 2025, they did audit. 2026, the company wants them to audit again. So should they submit a new engagement letter or not? Should they submit a new engagement letter? The answer is no, not needed at all. New engagement, a new engagement letter is needed only in the circumstances when any one of these happen. When entity has anyone have any confusion about terms and conditions, roles and responsibilities of audit. Auditor misunderstood or company misunderstood. They want to revise the engagement term and condition. Roles, responsibility, they want to revise. So engagement letter need to be revised. Directors of company have changed. Business has changed its nature or size. So work will also be changed. So engagement letter need to be revised. Laws and regulations have changed. Financial reporting framework changed as per law, or other reporting requirements changed. Now, so students, the any one of this occur, engagement letter need to be revised. So audit fee is normally based on time spent, level of staff experience, risk attached, and another point, a market norm is also important. What is the market norm of that service you are going to provide? So audit fee is decided as per that. Okay. Now, the next point is audit methodologies. The last topic for today. Audit methodologies. Yes, small topic it is. Students, it is called approach to audit. And basically, what is the part of our syllabus? That is risk-based approach or risk-based audit methodology. What it is? So basically, risk-based audit, auditor has to audit the financial statements to give report. This is ultimate. What is the ultimate purpose? Audit report is outcome of audit process. So in that case, the best approach, the cost benefit is risk based. Instead of checking everything in the financial statements, you identify those areas of financial statements which are most likely to be misstated. ISA 315 is this. International Standard on Auditing 315. You need not to memorize this number, not required for exam, but just came to my mind, I have written it. Okay. So, so first of all, you understand the business, financial statement, transactions, controls, business nature, and you feel and you try to relate everything, their impact on financial statement. Basically, this is the focus. This is the focus. And then you direct the audit work. Then you direct audit work to those areas of, for example, here at District, we identified research and development cost is high risk. It might, then we said, okay, they implemented new payroll system and implementation, there might be error. Payroll cost maybe. So direct audit work toward those areas. So this is the risk-based audit approach, which is relevant now. Remember that. Students, that's it for today. Today was the first class. So you have the notes now. So in the next class, will be full-fledged class, of course. We will be ending today a bit earlier. In the next class, ISA 315, even audit risk will also be covered here. I'm telling you in advance. And some answer drafting, we may talk about that as well. Okay. So basically, the next two classes are very much important. Okay. So because after that, we will, in the third class, we will shift to the kit. I'm telling you, we will be discussing the exam questions actually on audit planning. So please prepare whatever we have covered today very well. Any question from your side? No question? Okay. So see you the next Saturday. Till then, please revise this well, prepare well. God bless you. Take care. Goodbye. Goodbye.